Well, that didn't last long. The Canadian real estate market is a seller's market again. And what is the cause of this sudden resurgence? In today's video, we're going to talk about some of the main headlines, some of the emotions and reasoning behind why it is like this right now. We're also going to talk about the forecast for 2023. Is this going to last? Is this just a blip on the radar? More than anything, we want to activate our community. So jump in the comments, let us know who you are, where you're from, and your opinion of this sudden resurgence in the market. Do you think it's something that's going to last, or do you think it's just a blip on the radar? If it's your first time to the channel, welcome. I'm Justin Conoco, one of the co-owners of Prime with my incredible wife. Our team covers residential, commercial, and investing. So we have a very balanced perspective as to what's happening in the real estate market. And no, I'm not going to sell you anything. I just give you the facts as it is. We are going to dig into the actual data. I'll show you what we see from our perspective, boots on the ground, and we are very analytical in our approach. If you're looking for an agent anywhere on the planet as well, we also collaborate with people globally, so we can plug you in with agents anywhere that have the same caliber of expertise, market intelligence, and negotiation skills as we do. But let's dig right into the stats first, and then we'll get to the headlines. I'm going to go through a couple national statistics because I do think that they're relevant, and then I'll dig into a little bit more concise data. This is the average residential sale activity through all of 2018 Q1 straight up to Q1 2023. Understand we are at the end of Q1. So yes, sales activity is down. Very curious to see what the Q2 numbers look like given the uptick in activity. The residential new listings, again, this goes up to about Q1. The number of listings is down, but I can tell you from looking at the system, it is starting to skyrocket, and we'll dig into that data in a second. The residential market balance, this is the months of supply versus the sales to new listing ratio. So the sales to new listings, look at that spike at the very, very end. Look at how it's going up. So much more sales to new listings. Months of inventory simply means if I stop listing houses today, how many months before I run out of houses to sell? Anything sub 4 months is considered a seller's market. We've been in sub 4 for the last year, but it definitely hasn't felt like that. The buyer sentiment has been such that they're trying to beat up sellers, come in with crazy lowball offers. Do not get insulted if you're a seller and you get an offer 100 grand under asking. It's normal. You pay your agent to negotiate. So make sure you're using the best, or call us to get hooked up with the best. This is the average residential price. So massive correction from 2022. There's that big drop in pricing. You see a little bounce, you see it drop a little bit, and you see it starting to go back up. So the average prices are starting to increase for the first time in a long time, which is an indication to a lot of sellers that, yeah, you know what? Probably not going to see these prices again for another 5 to plus years. So I may as well sell my house now, take my bag of money from when I bought the place, in 2015, and then put that into another property that's discounted and ride that next wave. A lot of savvy investors are doing that right now. And then this is the average residential price correction from a national perspective. Interesting to see. Ontario took one of the most significant drops. The GTA, definitely one of those places that I think experienced a large volume of drops, but even a lot of the other primary markets like the Kitcheners, the Hamiltons, the Londons, and the Sarnias, like we'll go into some of their numbers and you'll see those corrections, but people have adjusted to the market and sellers are really starting to tighten up on price. And you can notice the flattening of the HPI benchmark price drop. So I think we all can agree, we understand what happened 2022 to 2023. None of us have a crystal ball, so we can't forecast exactly where this is going. But if you take out this massive spike and drop, you'll see where the trend line is starting to flatten out. Personally, I'm a big fan of sharing the Itso InfoSparks data. I think it's very concise. So the average sales price, I actually do max. So you can go to plus 5 years. The data goes back to 2010. You can see that the sales price keeps adjusting, right? From 2010, if I told you the average price of a home was 271, and then I went 5 years to 2015, it was up to 340. That is a $70,000 increase in the average price. That's close to a 60% increase in value. I think one thing you should start looking at is, when did you buy your house? What is it worth today? Look at this spike in value. If this trend line is continuing, does it make sense to keep the asset that you have now to ride that next wave? Or would it make sense for you to dispose of the asset, take that bag of money, and reallocate the funds somewhere else, seeing that we've had a correction and a drop in pricing? Now from 2020 or 563 all the way up to 777, understanding last year it was all the way up to 924. This to me doesn't make a whole lot of sense. 2020 to 2022, very much an artificial market. We all felt it. I bet you had conversations around the dinner table saying, this is crazy, this can't last. I know we were saying it as real estate agents. And if you're watching this thinking you're an agent, you're just trying to push selling real estate and buying real estate, doesn't matter to me if the markets are up or down. We are still trading real estate. Actually, we do a lot better in down markets because the amount of agents that just succeed because of the bull run, they get washed out super, super quick. If you're a skilled agent, you actually take market share in corrections and markets like this. What we're trying to look at is, what is the data telling me? And what I'm seeing now is, if I go down to a 3-year trend line from 2020, there's a spike. And here it looks like the trend line is starting to pick back up. We're going to monitor this on a monthly basis. So make sure you subscribe so you don't miss the future market updates. New listings. This graph kind of tells you everything you need to know. It is very cyclical. Despite what the media may tell you, it's very normal for you to have very low new listings in December and for it to spike up. It's also normal to see these little jackknives throughout the year as well, but we are heading up to more listings on market. So if you're looking for a home, you're going to see more inventory coming. I promise you. The number of actual homes for sale, we're back to around March 2018 numbers. March, it was 15,037. This March, we're about 15,310. So you're seeing a normalization of the real estate market in terms of how many homes are for sale. It feels like there's a billion homes for sale because of what we saw last year and the year before that, but this is much more of a normal market than you may think. The actual number of sales, this is a massive indicator of sentiment. Look at this. Look at it just bottom out in December, only 2,900 sales across all boards. And now look at this. We're all the way up to 6,158, and it looks like it's trending upwards. You're also noticing a massive drop in average days on market, 41 down to 30. So if you're selling a home, it should take 30 days for you to procure an offer and get a deal done. I think this is going to get skewed even more when we launch the next month's market update, because we've seen a lot of bidding wars in the last couple of weeks. And if all of a sudden a whole bunch of sales hit the system with 7 days on market, 3 days on market, 5 days on market, watch for this number to drop next month. Months of supply is creeping up to 2.9, indicating that there are more listings coming to market, more stuff sticking around. I love the percentage of list price number. This tells you what offers are getting it accepted at versus the actual list price of the property. So if you listed a place at $1 million, your offers are landing in the 990 range. The percentage of original price, however, is if they've done a reduction in price. So if you listed that at 1.2, you reduce it and then you accept an offer, it's coming in at about 98.2%. Meaning that if you don't price strategically, you can be leaving tens of thousands of dollars on the table. Average price per square foot, around $432. This is holding very accurate. I've seen some sales in the 300s, and it blows my mind because I think that actually skews the stats. I've also seen sales over 800 a square foot. Sometimes very unique properties or very small properties trade for a higher dollar per square foot. So you got to be ultra strategic in your analysis and your pricing strategy. And the total volume of real estate traded is skyrocketing. $4.7 billion has traded on our board, and it looks like it's rising. Very curious to see what's going to happen through next month's stats and update. We have a ton of other headlines, a ton of other things that we dig into in the actual newsletter, but I really wanted to dig into the data first. Let's go on to some of the other topics. So if you're hoping to buy a home, Phil Soper, who is one of the brightest minds in real estate, has recently indicated that by the end of 2023, they are forecasting a 4.5% increase in pricing year on year. Take the value of the home you're looking to purchase, start doing the calculation of the price is going to go up 4.5 every single year. Look at lending rates right now and understand lending rates are probably going to hold where they are. What is the opportunity cost of purchasing a home now versus waiting? And it has to be right for you. I don't think you should rush into purchasing. I think you should be working with a power team to ascertain if home ownership makes sense for you right now, but it's definitely something to think about. And Deloitte, who is also very analytical, and Deloitte Canada, who's also very analytical and can be very bearish on the real estate market, was indicating they're forecasting rate cuts to come by the end of the year, driving the market even harder. And Cantech Letter just posted something super interesting, indicating that 10 of the richest people in Canada are still heavily invested into real estate. A lot of people got liquid over the last year. I know a ton of investors that really built large portfolios in the last 5 to 10 years. They started selling properties left and right and started writing offers on other things because they saw that those price adjustments had happened. They maximized where their values were going to be on what they were holding. So they extracted those funds and they're buying in what's considered a down market. Something to think about if you're building an investment portfolio. That's something we do specialize in. And we can definitely give you some perspectives on who's moving what and who's not. And the last point I want to make is rental rates have gotten out of control. There was a massive compression in the rental market. Last year, there were a couple cycles where there was a lot of inventory and all of a sudden there weren't as many renters, but that did not last very long. Lifelong renters need to save historically 50% more than homeowners in order to plan for retirement. There's also another trend that we're noticing where large conglomerates like your Amazons, your Teslas are buying hundreds of acres and all of a sudden discussing building micro homes and building micro communities, because quality of life can be very much closely tied to distance from work. And what if we live in a world where all of a sudden your employer is the person you're renting from, or the government's buying up land, or corporations are buying up land and properties and not ever wanting to resell the real estate? They just want you to rent from them forever. They should give you some perspective in terms of what's happening in the real estate market, how the corporatization of real estate may affect future home ownership, and how some people are looking at the decisions they make today and how they can affect their life over the next 20 or 30 years. I could probably talk for hours and hours, but I don't want to bore you. Tons of this content, all the links are in our Prime Insiders newsletter. Jump in the actual description. Make sure you're getting that newsletter. Give us feedback. If there's things I did not cover that you want opinions on, I can do micro videos for that for you. If you're looking to get educated on the real estate market, find different neighborhoods to live in and get the real pros and cons of those neighborhoods, this is the channel for you. I'm Justin Conoco signing off. I appreciate your time more than anything on the planet. We value our community, and our goal and our purpose is to provide more value than we take. Hopefully you got some value from this. If you did, jump in the comments and let me know. If you didn't, let me know as well and tell me what I could have done different. We definitely want to keep getting better and better and provide you the information that you want.